The Debt Management Office, on behalf of the Federal Government of Nigeria, has announced the offer of 80 billion naira in FGN bond for subscription via auction slated for July 28, 2025, with settlement expected on July 30th, 2025. This is according to the circular posted on DMO on their website. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The offer of the federal government bond comprises two opening of previously issued FGN bond, which is 20 billion naira, is being offered for the 19.30% FGN April 2029 bond, which has a 5-year tenure, while 60 billion naira is allocated to the 17.95% FGN June 2032 bond, with the maturity period of 7 years. Each bond unit is priced at 1,000 naira with a minimum subscription of 5,000 naira. And additionally, investment in multiple of 1,000 naira, allowing investors to subscribe for up to 50 million naira. The interest rate for the bond will be determined based on the yield to maturity bid that clears the total volume offered at auction. As these are reopening of previously issued bond, interest payments will be made semi-annually, while the principal will be repaid in full through a bullet repayment at the bond maturity date. The July 2025 bond auction is less than 100 billion naira offered in June. The first instrument offered was a 5-year reopening bond with a coupon rate of 19.30% set to mature on April 19, 2029. I beg your pardon, April 17, 2029. The bond attracted 30 bids totaling 41.685 billion naira in subscription, signaling strong investors' demand. However, 2 bids were successfully with a final allotment of 1.050 billion naira. The second instrument, a newly issued 7-year bond carrying 17.95% coupon rate and maturing on June 25, 2032, gathered 209 bids with subscription amounting to 561.170 billion naira. Out of these, 41 bids were accepted and 98.950 billion naira was allotted. According to the DMO, the bond issuance was carried out in compliance with the Debt Management Office Act 2023 and Local Loan Registered Stock and Security Act (CAP) L17 Law of the Federation of the Nigerian 2024. The DMO advised interested investors to contact any of the authority primary dealers, market makers for application and for further guidance. This institution include Access Bank PLC, First Bank of Nigeria, Stanbic IBTC Limited, Citibank Limited, First Bank, Monumental Bank PLC, Standard Chartered Bank, Nigerian Limited, Coronation Merchant Bank Limited, among others. The Minister of Finance, Wale Edun, has described the release of the Nigerian 2024 rebased gross domestic product figures alongside the first quarter of 2025 growth estimate of 3.13% as a clear indicator of economic resilience and the success of ongoing reform. The GDP rebasing carried out by the National Bureau of Statistics is Nigeria's first since 2014 and aligned with the international best practice. It offers a more accurate, comprehensive view of a country's economic structure, reflecting evolving sectors such as digital, technological, entertainment and professional services, as well as broader diversification across non-oil industries. The rebased GDP provides a clearer lens through which to view Nigeria's economic performance. The minister stated that it allows policymakers, investors and citizens to better understand the true size and composition of the economy so that they can be plan more effectively and deliver greater prosperity to all Nigerians. Economic structure reflects a modernizing, diversifying nation. The rebased data highlight a significant shift in the Nigerian economic makeup. The service sector include ICT, financial services and entertainment now play a greater role in GDP contribution, while agriculture and manufacturing remains foundation. The relative share of oil and gas continues to decline, a reflection of the country's ongoing effort to diversify its economic base. These changes are not just statistical, they reflect real transition underway in the Nigerian economy. Edu noted that the young tech-savvy population is powering growth in new sectors, and the reforms are unlocking potential in industry that were previously underrepresented. This transformation, according to the minister, is backed by strategic investments in productivity, infrastructure, innovation and human capital development, with emphasis on future-facing sector capable of generating inclusive and sustainable growth. The minister also cited the 3.13% year-on-year GDP growth in the first quarter of 2025, a notable increase from the 2.4% in the first quarter of 2024, as further evidence of Nigerians' upward moment under the renewed hope agenda. Key contributors to the performance include agriculture, telecoms, construction and financial services. The minister reaffirmed the federal government's medium-term ambition to achieve 7% annual GDP growth, emphasizing the importance of structural reforms, fiscal discipline and targeted investment in driving the nations forward. The Federal Ministry of Finance commended the NBS for its technical precision in delivering the rebasing exercise and quarterly report, saying the goal is not just growth but growth with impact. The new data helps to refine strategies and ensure that expansion translates into real tangible benefit for all Nigerians. Edu stated that the update metric offers stakeholders tools to design data-backed policies that unlock the full potential of Nigeria's economy and track meaningful progress towards quality job creation, increase income and improve living standards. Nigeria, for the first time, imported more crude oil from the United States than it exported, marking a historical reversal in petroleum flow between the two nations, according to the U.S. Energy Information Administration. This development occurred in February and March 2025, driven by operational changes within the Nigerian refining landscape and reduced crude demand on U.S. East Coast. This shift is attributed primarily to the rise in crude demand from Dangote Refinery, which began processing oil in January 2024 and is on track to reach its full capacity of 650,000 barrels per day later this year. The facility is the largest single-train refining in the world and represents a key component of Nigeria's bid to reduce its reliance on imported refined fuel. According to the EIA's latest figures, U.S. exports to Nigeria surged to 101,000 barrels per day in February and 169,000 barrels per day in March. Meanwhile, U.S. import from Nigeria fell to 54,000 barrels per day and 72,000 barrels per day respectively, down from 133,000 barrels per day in January. This reversal was partly due to a refinery maintenance at the Phillips 66 Bayway facility in New Jersey, which slowed U.S. demand for imported crude. Later in the year, import of the Nigerian crude resumes as the Bayway returned to normal operation and the Dangote refinery underwent unplanned maintenance. The new refinery in Nigeria and some issues in securing domestic supplies played a role for those unique flow earlier this year. Speaking at the West African Refined Fuel Conference in Abuja, Aliko Dangote, president and CEO of the Dangote Group, confirmed that his refinery sources 9 to 10 million barrels monthly from the US and other suppliers. He noted some of this crude as purchased from international traders who buy Nigerian crude at a premium, only to sell it back, highlighting inefficiency in Africa's energy value chain. Dangote decried the standard quality of fuel often exported to African markets, urging a shift towards domestic refining, quality control, and regional self-sufficiency in energy. Let's take a quick short break. We'll be right back. Don't go away. Stay with us. Back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. Dangote Sugar Refinery PLC has returned to profitable in the second quarter of 2025, reporting a pre-tax profit of 523.8 million naira, a remarkable turnaround from the 104.5 billion losses recorded in the same period last year. The reborn slashed the group half-year loss to 22.1 billion naira, a significant recovery from the 211.4 billion naira losses reported in the first half year of the 2025. Strong revenue growth helped fuel the recovery, with the second quarter revenue rising to 25.09% year-on-year to 216.2 billion naira, up from 172.8 billion naira in the same period last year. This brought total revenue to the first half of the year to 430.2 billion naira, up, that is 45.53% from the same period last year. Sugar sales to the Nigerian Bottling Company accounted for 63.9 billion naira, that is 31.74% in the second quarter revenue. Although cost of the sales rose by 6.3% to 173.8 billion naira, mainly driven by raw material expenses, gross profits climbed to 42.4 billion naira, a 351.8% increase from 9.3 billion naira in the second quarter of 2024. Administrative expenses rose sharply to 6.4 billion naira, up to 52.6%, but that did not stop the company from posting a significant rise in the operating profit, which came in at 35.3 billion naira, up from just 5 billion naira a year earlier. More critically, the group managed to reduce its finance cost, which had previously been a major drag on earnings. This cost most due to exchange rate losses, which fell to 35.1 billion naira in the second quarter from 111.6 billion naira in the same quarter last year. This sharp reduction played a key role in helping the company to return to pre-tax profitability. On the balance sheet, a total asset rose to 44.56% year-on-year to 1.03 trillion naira, reflecting growth and investment. However, retained losses dipping to 149.9 billion naira from 77.1 billion naira in the same period of 2024. As of market close on July 23rd, 2025, shares of the companies were priced at 16 naira, reflecting a year-to-date gain of 84.62%. About 29.4 million banks accounts in commercial banks were recorded to close as at March 2025, as bank makes effort to clean their books of questionable accounts and comply with the regulatory on leakages of bank accounts to national identity number. This figure, however, represents a full recovery, as the bank book shows 33.29 million closed accounts the previous month of February, which was a newly high from 29.43 million recorded in January. The March 2025 figure represents a 30.43%, that is 6.86 million year-on-year increase in the number of closed bank accounts compared to 22.54 million bank accounts closed in March 2024. These were contained in the latest data of the Nigerian Interbank Settlement System, which also indicates that the number of the dormant or inactive bank accounts grew by 13.6 million, that is 71.3% year-on-year, to 33.39 million in March 2025 from 19.79 million in the corresponding period of 2024. A bank account is classified inactive when it records zero transactions, including deposits, withdrawals, transfer, or point of sales transaction for 6 months. However, details of the industry bank account database that are reported by banks and complied by the Nigerian Interbank Settlement System also indicates that the number of the active bank accounts grew by 100.41 million, that is 45.7% year-on-year, to 320.05 billion in March 2025 from 219.64 million in March 2024. Recall that in December 2023, the Central Bank of Nigeria issued a directive to all commercial banks in the country to restrict Tier 1 accounts without proper biometric verification number and the national identity number that are not linked by Thursday, March 2024. According to NIBS data on BVN enrollment accounts, 66.23 million Nigerians have BVN as at July 2025, compared to 61.6 million as at April 2024. Nigerian Dollar Mutual Fund continued to attract investors' interest in the first half of 2025, with net asset value rising by 12.4% to 1.92 trillion naira as of June 2025, according to the latest data from the Security and Exchange Commission. Dollar mutual funds are collective investment scheme that primarily allocates capital to Eurobond and other dollar-dominated fixed income securities, offering Nigerian investors a reliable edge against the depreciation of the local currency while providing access to relatively stable returns. These funds are gained popularity among both retail and institutional investors looking to diversify their portfolio and protect wealth against currency risk. As of the end of June 2025, the 34 SEC registered dollar mutual fund delivered an average year-to-date yield of 6.73%, slightly below the 7.63% recorded at the close of 2024. This decline is largely attributed to falling yield in the global fixed income market, driven by interest rate cuts from major central banks, including the U.S. Federal Reserve. The global monetary easing cycle has led to a compression in yields across most fixed income instruments, including Eurobond, which constitute a significant portion of the fund's underlying assets. Data from the Debt Management Office indicates that average Eurobond yields dipped from 9.525% at the start of the year to 8.534% at the end of June, further explaining the moderation in returns from dollar mutual fund. While yields may have moderated, the edge against the FX volatility remains a compelling reason for continued investment in dollar mutual fund. Funds managers have responded by adopting diversified strategies to enhance returns, including selective positioning in high-quality sovereign and corporate Eurobond. Dollar-dominated mutual funds have solidified their position as a preferred investment option for Nigerians looking to protect their wealth against exchange rate volatility, navigate the impact of global interest rate fluctuation, and preserve value amid persistent inflationary pressure. As market conditions evolve, these funds are likely to remain a key part of diversified investment strategies for both retail and institutional investors. Financial analysts are calling on the Central Bank of Nigeria to increase its gold reserve and diversify its foreign asset holding, including considering crypto-based instruments as a global uncertainty continues to reshape central bank strategies. The push for diversification gained renewed attention at the recent Commercial Partner half-year Economic Outlook event, where leading economists and treasury executives highlighted the benefits of non-traditional assets amid inflationary pressure and geopolitical volatility. According to the official data by the Central Bank of Nigeria, held 687,402 troy ounces of gold at the end of 2024, unchanged from the previous year. However, the value of this reserve nearly doubles to 2.77 trillion naira, up from 1.28 trillion naira in 2023, fueled by a jump in gold market price from $2,062.98 to $2,624.39 per ounce. This gain of over 1 trillion naira reflects not only on the asset resilience but also a broader international trend of central banks increasing gold purchase in response of the economic stability. Alright, this is where we draw the curtain on Business Point today. Join me again tomorrow on Global Television on DSTV channel 365 and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms as Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.